Welcome to the headline, everybody. I'm Dave Briggs here on the floor of the New York Stock Exchange as late rocker Tom Petty sang the waiting is the hardest part. Investors, prospective home buyers, so many facets of the U.S. economy waiting to hear the size, not if, those interest rate cuts will come and the Federal Reserve convenes next month. Wait no longer. Sid Vedia has all the answers. He is the U.S. Chief Investment Strategist, Senior Vice President at TD Bank. Sid, good to see you. I kid there, but what is your best bet in September and for the remainder of the year as far as interest rate cuts go?
So we are fairly confident that the Fed will start cutting in September and with the 25 BP cut. They'll follow that up with two additional 25 BP cuts in the fourth quarter. So 75 BPs for 2024, but a lot more in 2025. Up to 150 BPs is our current forecast.
So it is a cycle, not just one meeting. Clearly, the markets are flip-flopping here. They would like to see 50. Will we see disappointment if it's 25?
No, in fact, I think for the most part, most investors are expecting 25 BPs. I think if they do 50 BPs, that may actually lead to some concern that the Fed knows something that we don't know, and there may be more issues at hand in terms of just a slowdown in the economy or more on the employment front. And so we are really fairly in the sort of middle of the camp where it's 25 BPs for September. And it's always good to start a little bit slower. They have been very kind of data dependent, and I don't think anything is going to change that in this cycle either.
As you say that, yeah, it's always data dependent. Is there any data that could come in that could change this narrative, though?
I think we've got two data points that are most important before the next Fed meeting, and we have an inflation print and then an employment print as well. We think 25 BPs is baked in, irrespective of what happens. I mean, certainly there is an outside chance that there could be a shock data print, but we are in the camp that we will likely get close to what is expected by the market. And so 25 BPs for September is our base case. And then they will pause and see how things go. But we are expecting a further two rate cuts in the fourth quarter in November as well as December.
And so do you expect anything close to a mission accomplished as far as inflation goes? Will we get that 2%?
So our projection right now is that, this year is going to be a little bit choppy in the sense that inflation is still is going to stay steady, but below 3% for inflation. But next year, by the end of 2025, our current projection is that the Fed's core PCE kind of gauge will get close to that or at 2%.
What's your read on the consumer at the moment?
So it's a mixed kind of reading, I would say. There are certain segments of the population that are certainly hurting and are challenged by the higher for longer interest rate environment. And we kind of see that, and that's on the kind of lower end. But, consumers are still spending. I mean, I just came back from Europe. People are still taking trips. They are, they want the experiences. So I think consumers are still spending. We saw, a solid retail sales print. We also saw just good prints on the consumer confidence front just very recently. So, the consumer is still holding up pretty strongly, as a whole. But there are certain segments that will continue to be challenged till rates get down a lot lower from where we are currently.
Yeah, by some metrics, it appears they're spending beyond their means, but nothing new there. So given the environment you just laid out, what's your best investment advice?
So I'll start from the top. From an asset allocation standpoint, we are expecting a little bit of a cool down. So I would frame it as a cool down before the rebound. So in 2024, we are expecting sub 2% growth for the next two quarters. But then in 2025, we will see a rebound where GDP growth sort of moves back above 2%. In terms of an investment sort of scheme going forward with that backdrop, it's really a good environment for bonds, especially. So we have interest rate cuts in the offing. And we've been waiting a long time. Investors in fixed income are still getting a high level of interest income. And irrespective of whether, we see more of a slowdown than expected or, the economy continues to be resilient, interest rate cuts are going to be a key catalyst. still want to be high quality in fixed income. So we would recommend short-term bonds, agency mortgage-backed securities, and intermediate treasuries. There are opportunities on the equity side as well, but you want to be a little bit more selective just because we are expecting a little bit of a growth sort of slowdown over the next 2 quarters. But certainly our highest conviction is still with the US, whether it's US large cap, US small and mid cap. Certainly growth stocks have done really well in over the last 8 months.
Yeah.
However, we expect with interest rate cuts, that'll serve as a catalyst even for value as well as small and mid cap stocks. On the international front, China is kind of our max underweight. We think there are some challenges there. But for the most part, you do want to be invested. You do want to be diversified in the equity space as well.
Yeah, you mentioned what's driven the market so far. It's been AI, it's been big tech, it's been Mag 7. Typically, lower interest rates are favorable for those type of stocks. Will that trend continue?
So I think when you look at the Mag 7 and large cap growth stocks, certainly they've seen outsized returns this year. And that, NVIDIA itself accounts for close to 30% of the S&P 500 return. The other Mag 7 account for probably 25 to 30% of the S&P 500 return. But what was really encouraging is when we had that pullback in July into August, and then we saw the rebound, some of these Mag 7 stocks are still not close to their all-time high. Some are down, 5%, some are down 25%, Tesla, for example. However, the S&P 500 is close to its all-time high. So that just gives you a sense that the rest of the market is starting to catch up, or we are seeing some broadening in the rally. And that's a really good sign going forward. I think interest rate cuts are going to serve as a key catalyst, especially for small and mid-cap stocks next year, and as well as on the value side. So I think you're going to see broadening, a little bit more rotation from the large cap growth stocks.
So no sector more reliant on interest rates probably than housing, which has struggled as of late. The cuts that you laid out, how do you expect them to improve the housing market, maybe even housing stocks, mortgage rates?
So I think it's going to take some time. I think mortgage rates will certainly see some impact as interest rates sort of move lower. But we're not expecting a whole ton of interest rate cuts in 2024. So even though 75 beeps helps, I think by the end of next year, you're going to start seeing some impact. Having said that, though, some of the mortgage rates that people were able to secure in 2020, 2021, close to 3%, we are not expecting mortgage rates to get anywhere close to that. So, best kind of estimate would be around the 5.5% level. That's if all the interest rate cuts do happen. That will certainly open up the market. But there are still a ton of people that have secured those mortgages at 3.25%, and even a 5% mortgage rate may not really persuade them to sell and enter into a new mortgage arrangement a lot higher than what they had secured.
Yeah, that's why many feel this market really doesn't improve until 2026, a long ways out. Let's put a bow on this thing. Overall, has the Fed pulled this off? Is a soft landing all but guaranteed at this point?
I don't think anything can be guaranteed in the investment world. I would say, the Fed doesn't want to take a victory lap. The comments are that they have been very gratified to see inflation sort of continue to moderate lower, and that's a great thing. They have managed to cool the economy to a certain extent, but it is a double-edged sword, and they've admitted that as well. So there are two-sided risks. They are more focused now on the economy and the employment front, and less on the inflation front. Inflation, we believe, is going to continue gradually moderating to that 2% level, but it's just going to take a little bit more time. We are, 2 or 3% lower than where we were last year, and that's a great sign. But I don't expect the Fed to sort of ring the bell and declare victory anytime soon.
Final question: the election throw any type of wrench in the markets in these last 68 days?
So I think we should be very clear. Elections, by their very nature, are create uncertainty. Uncertainty creates volatility in markets. I think we're going to see some volatility in markets the closer we get to the election, and that should be expected. But from an investment standpoint, I would almost frame it as using it as an opportunity to get invested if you have excess cash on the sidelines. We see a really solid backdrop, both for fixed income as well as equities. And if you're investing for 12 months, 18 months or longer, I think that's a really good backdrop and good setup for investors getting invested in risk assets, both on the fixed income side
Yeah.
as well as the equity front.
I think we touched them all there. U.S. Chief Investment Strategist Sid Vaidia. Good to see you, sir. Thanks so much.
Thanks for having me.
Coming up, the heat is on for Trump and Harris this August, but for very different reasons. Where does the race stand with less than 70 days to go? Stay with us here. More Cheddar after the break. Welcome back to The Headline. I'm Dave Briggs. The indictment and the interview. In late August, the heat is on both former President Trump and Vice President Kamala Harris, albeit for far different reasons. Where does the race stand with less than 70 days remaining? Market Watch Washington Bureau Chief Rob Schroeder with us now here on Cheddar. Good to see you, sir. So let's start with that indictment. What, if anything, does it mean for Donald Trump, with the caveat there's no chance the trial starts before the election?
That's right. Hi, David. Certainly an unwelcome distraction, to say the least, for former President Trump. You know, I'm sure he'd rather be out campaigning in those handful of swing states that are going to decide the election. He will be out on the road later this week, but certainly this does shake up the campaign, just as Vice President Harris is, as you mentioned, about to sit down with her running mate for one of these big televised interviews that people have been really clamoring to see.
Yeah, I want to circle back to that in a moment. But first, on the indictment, those who don't like Donald Trump already really factored all of this in. Could it actually energize his base? Is it almost a James Comey-like moment?
There's always that possibility, certainly. I think these things do tend to be, sort of rallying point, as you put it, or rallying cry for those who are in his camp. On the other hand, there may be a sort of fatigue that goes along with this. It's not a great thing when you're trying to appeal to the middle, which is the most important part in American politics, or independence, when you have headlines that contain the words indictment, prosecution, obstruction, things like that. Not something that you want to have associated with the highest office in the land. Of course, that is if you were not a partisan and you don't believe those charges in the first place.
Yeah, most polls do have her widening her gap among independents. But speaking of independents, any bounce for the Trump campaign with RFK's endorsement?
That was an interesting moment in this race, to say the least. RFK said some unflattering things about former President Trump, and former President Trump has since added Robert Kennedy Jr. to his transition, or rather to his campaign apparatus. So there was actually, as of last week, Harris, I think, was still leading in the prediction market, so it hadn't been quite baked in as of yet. But I think it really remains to be seen what that's going to give to former President Trump with that addition.
All right, to the other side now. We mentioned Kamala Harris will finally sit for that first interview since becoming the nominee Thursday night on CNN. How high are the stakes for the Harris campaign?
She's had, I think, a good rollout by most measures. The optimal word here that we keep hearing is joy or joyful. And she and Governor Walz certainly were able to project that sort of aura about them from the convention. But now comes the hard part. They need to turn joy into votes. And to get votes, you need to appeal to people's wallets, to people's pocketbooks, that sort of thing, on issues that really matter to them, like housing, like inflation, like prices of goods and services that we all pay for. So I would hope, as a reporter myself, that she would be pressed on those issues in that interview. So yes, I would say the stakes are rather high, particularly when she has not had a proper sit-down interview like this for quite some time. Nor
a formal press conference. Talked to a lot of nervous Democrats. She's never been great off script, so it should be interesting. What else do we know about what she wants to do with the economy, housing, etc.?
Right. Well, she's certainly made housing-related measures a big part of her campaign. We're talking about, subsidies for new home buyers, push to build more housing, things like that. And you mentioned that study that just came out. One of the key things here really is that former President Trump wants to extend those tax cuts that are associated with his name, and that is probably one of the most important, if not the most important, results or could be results of this election, which is what happens to those tax cuts. Because if in fact, let's say former President Trump wins again, the Congress goes into Republican hands again, that obviously makes it not a done deal, but certainly more on a glide path than it otherwise would be. Now, Vice President Harris would put the brakes on much of that agenda and raise taxes really on those who are making more than $400,000 a year. So that's quite a stark difference. She would also put the corporate tax rate back higher than where it is now, and so on. So you've got two dramatically competing visions here, and that's most definitely not a scenario in which she's wearing a MAGA hat.
Indeed. It's interesting as we look down the road. So Trump's really leaning into tariffs, and just like Harris, both need control of the House and Senate, and that's why the markets really want divided governments. If those tariffs were impacted, what's the read? Would that fire back up inflation?
Tariff policy is actually something that both Democrats and Republicans have embraced over the years. President Biden, when he was first elected, kept many of President Trump's tariffs, particularly on China. But I think, as you suggest, you have to walk a fine line because if there's too much of a tax, as many people call it, many analysts call it, put on goods coming into the border, well, it's consumers who have to pay those prices, those extra prices. And you have seen, particularly former President Trump, be much more aggressive on this. And there is some worry in sort of economic analytical circles that this would be very damaging to the consumer and that it could, obviously drive costs quite a bit higher. So former President Trump doesn't see it that way. They criticize these studies pretty heavily and say that they're for the good of American consumers and American industry. So that's certainly something to watch here as we get closer to November.
Yeah, and as we get closer to September, Jerome Powell all but certain to cut rates September 17, 18. Do you expect that he becomes a political, I'd say football, but maybe more of a punching bag for the Trump campaign?
I think it's going to be very difficult for the Fed chairman to stay out of the headlines, so to speak, or at least the related content in some of the stories that people like myself would write. A September Fed meeting and a November election are just too close together to be unrelated, let's say, in the minds of the candidates, particularly former President Trump, who, as you know, did a fair bit of criticizing of Chairman Powell, even though he did appoint him. So, yes, it does appear that a cut will be coming. We have to pay attention to the next jobs report because the July one was very weak, and that spurred some recession fears. But yes, ironically, I think former President Trump is probably desiring a cut. He would like that sort of thing. So he may get what he wishes for in a sense. But the timing, I think, given his past statements, he might make more statements after that move is made in about less than a month's time.
All right, look into that political crystal ball. Is there any potential October surprise out there, or does it simply put all the chips in on that September 10 debate?
If I had a crystal ball, I'd be looking into it right now. But the debate, certainly, we just had that firmed up by former President Trump. There was a bit of a question mark hanging over that for a while. That may not be the last one. I think that is the next inflection point. But Americans haven't really gotten to see Vice President Harris and former President Trump side by side in the same room, debating the same issues and seeing how they treat each other, the shots that they would take at each other, and what really it would mean for your money, for your investments, for companies and employment. So yes, I think that's the next thing to watch. So I'm really looking forward to it myself.
Oh, it's going to be a massive number there on ABC News. My thanks to Rob Schroeder, Washington Bureau Chief at MarketWatch. Thank you, sir. Appreciate that. Stay with us. Much more Cheddar after the break. Welcome back to The Headline. Here are some of the top business stories you may have missed this week. Mark your calendars for September 9th at 10 a.m. Pacific time, or glow time, as Apple calls it. That's when Apple is expected to announce the iPhone 16. There is no explanation as to what glow time is, but it's expected to be one of the phone's generative AI features the company refers to as Apple Intelligence. In June, Apple teased its Genmoji, an AI-generated emoji, and a significantly smarter Siri, which can answer questions about your schedule, emails, or even provide flight information. iPhone 15 Pro Max users will reportedly be able to use some of the new features. Over 200 former Republican staffers have endorsed Democratic candidate Vice President Kamala Harris for president. In an open letter, signatories include key figures from the Bush, McCain, and Romney campaigns, criticize Donald Trump's leadership and his ties to authoritarian figures. They argue his re-election would harm Democratic values and urge moderates and independents to support Harris, highlighting the rift between Trump and the traditional Republican establishment. The wait is over. Vice President Kamala Harris will finally sit for her first interview since becoming the Democratic nominee. Thursday at 9 Eastern Time, Harris and Minnesota Governor Tim Walz will speak with CNN's Dana Bash as the candidates continue a bus tour through Georgia. 37 days without an interview or formal press conference have opened up Harris to attacks from Republicans and criticism from the media as well. The race is considered neck and neck as both candidates prepare for their first debate on September 10th. A not-so-cruel summer for the Kelce brothers. Retired Philadelphia Eagles center Jason and current Chiefs tight end Travis Kelce have signed a 3-year, $100 million deal with Amazon's Wondery for their hit podcast, New Heights. The Kelce brothers began the podcast prior to the 2022 NFL season, discussing life on and off the field, as well as interviewing celebrity guests. New Heights won the Podcast of the Year award presented by iHeart. Everyone's favorite football coach may be making a comeback. Warner Brothers Television moving closer to a fourth Ted Lasso season by renewing contracts for key cast members, including Hannah Waddingham, Brett Goldstein, and Jeremy Swift, but no agreement yet with Lasso himself, Jason Sudeikis. This step indicates strong interest in continuing the beloved Apple TV series, though deals with other cast members are still negotiating for early preparations for a writer's room underway, with production possibly starting in early 2025. And that's going to do it for this week's edition of The Headline, but don't go away, more Cheddar up next.